Hey, welcome back to Everyday Economics. This is the podcast that helps you learn about the economic world happening around you every day. I'm your host, Chris Krug, CEO of the 501c3 nonprofit, nonpartisan Franklin News Foundation. Everyday Economics is a production of America's Talking Network, and you can subscribe to all of our podcasts at americastalking.com. To support Everyday Economics, please make a tax-deductible charitable contribution by clicking the link in the show description. Recording this episode, it's Friday, January 17th already, Dr. O.
I know, it's going fast, right?
And of course, my partner, co-host, and one of my best friends in the entire world, Dr. Orphe Divounguy, is with us. He's a PhD economist. Hey, Dr. O, every week in the Center Square and across the Center Square Newswire, you write the Everyday Economics column. Not super heavy on opinion. It's mostly data and focused on sort of what to look for. The week ahead, pretty light week. We got MLK Day, Martin Luther King Jr.'s day on Monday. So a lot of things are closed. The markets will be closed for sure. Certainly a lot of schools and a lot of businesses take the day off, including...
Isn't it amazing, though? My kids
mine.
came home from school yesterday and started talking about Martin Luther at the dinner table.
Well, how cool is that?
It's fascinating. I mean, you know, they're taught about the fact that so much progress has been made in this country, you know, and I think that's a wonderful thing.
I agree with that. And the content of the character, I think that's an amazing lesson for all of us. So really, I mean, as far as it goes, I mean, we're going to get like initial jobless claims that are going to come out next week. We're going to get some home sale data. You know, not a whole lot. But from this past week, I mean, there's some pretty remarkable stuff, I think, that's kind of underlying that we should be talking about. Inflation and retail sales. And what's your take on let's go with inflation first.
Well, look, we got another inflation report. Remember, markets were really fearing the fact that they thought, at the very least, that inflation was on the rise. And that with inflation on the rise, it would mean basically the Fed won't cut as much. And so for people that were betting on rate cuts, there was a quick adjustment, right? They were like, oh no, we won't be able to sustain this. And so you saw the markets reacting with a stock market sell-off. You saw the treasury yields increasing. And people, you know, some people started to panic a little bit. Well, you know, and ultimately, the reality is the reason rates were going up, treasury yields were going up, is because the economy is strong. And a strong economy is actually usually very good for the stock market. So I just thought it was kind of funny to hear the various debates on various shows about like what could be happening and all this stuff, you know. But no, we have a strong economy. But if you look at the labor market, it's strong, it's robust. My good friend, EY chief economist Greg Dacko said, strong, robust, but frozen is what he called it. And so that's what's going on. We have an economy that's strong, but because rates have been higher for longer, there's less mobility in the labor market. Less mobility lends itself to, so basically fewer job-to-job changes. Most people get a big raise when they change jobs. And so fewer job-to-job changes means, you know, not a lot of pressure on wage growth.
No.
And, right.
That has chilled out considerably.
That's right. Not a lot of pressure on wage growth. And so, you know, probably not a ton of inflation coming from people spending more money, coming from people feeling really optimistic about the job prospects, and so going out and buying, new expensive items. You know, people not asking for a raise necessarily because you know they're sitting still and they realize that the things have kind of like chilled out.
Well, but you bumped into it. You know, we're like, I want to talk about retail sales. I mean, people, you know, obviously Americans never stop consuming. We always want more stuff. We want more new, different things. You know, I mean, retail sales ultimately is the reflection of I guess, how much we want them or how much of that we can afford. I mean, and
Yeah.
what's that data point look like right
I mean,
now?
it's 3.9% year over year gain in December.
Okay.
We wrote about it in the Center
Yep.
Square
Merry
column
Merry Christmas and Happy
about the
Hanukkah.
holiday spending, right?
Yep.
But when you adjust the sales for inflation, remember the total sales number increase is both volume of sales times prices, right? And so, the number of stuff I bought, widgets I bought, times times the price gives you the total number, the total sales number, right? Sales figure. And so, if you adjust sales for inflation, um, it wasn't very strong. It amounts to just 1% increase in sales after adjusting for inflation. And so, retail sales were actually surprising on the downside. Uh, so consumers haven't been very much consistent to the story I've just been saying, which is that we have a strong labor market, but consumers haven't been spending all that much because the number of job openings has dwindled uh, relative to the number of people looking for work. There are
Mm-hmm.
fewer job-to-job changes, fewer raises in the past year. So you have a strong but cooling labor market.
Yeah.
Uh, and it's showing up in the sales in the retail sales numbers as well. So anyway, that's that story. What else? What else do we have on the calendar?
I mean,
Uh,
there's not a whole lot that's coming up this week.
yes, yes.
It's an odd week, but I mean, in terms of how about this?
And,
You know,
and,
it's
and look, going back to the inflation picture,
yeah.
right? Because the
Okay.
inflation picture is causing a lot of stir. Um, yes, inflation, the headline number showed a small uptick in December, but core inflation surprised on the downside.
Mm-hmm.
And remember, those volatile energy and food prices, they're volatile for a reason. Part of it is just like supply shocks that could potentially affect the price of energy. We saw a big increase in gas prices, 4.4% surge in gas prices. And that's, of course, what pushed the number higher. But when you look at the consumer itself, and I mentioned that just now, the consumer is moving cautiously, right? Moving cautiously. The increase in consumer debt is slowing, right? Consumers are more relying on their labor income. They're saving a little bit more. They're being more cautious about what they're doing. They're turning to value, and it's showing up everywhere. You see Walmart's numbers are amazing because consumers are turning to value, right?
Yeah.
They're not, it's not the same consumer that we had in 2021 or even in 2022, right before the Fed started raising interest rates, and your credit card rates followed.
Well, we have to look forward to your column on Monday and kind of see what else you're sort of picking and choosing to talk about. But that's a terrific summary of the week that was and a week ahead that looks a little bit light, but who knows? We might get
We'll
some.
get existing home sales. We'll get another
Yeah.
housing update, existing
Yeah.
home sales. But even there, you'll be surprised to see that even despite the big rise, we had a big rise in mortgage rates.
Mm-hmm.
Um, there's such a massive housing deficit across the country that buyers are sitting there waiting for they're leaning into smaller homes. They're buying they're buying what they can afford. And so I see more activity. You see more activity on the affordability, on the more affordable side of the housing market than you're seeing elsewhere, because people are looking for affordability everywhere. That's going to be on the for sale side as well as for renters.
Always appreciate your thoughts. For Orphe Divounguy, this has been Chris Krug. Subscribe to Everyday Economics and dozens of other quality podcasts at America's Talking Doc.